Hello and welcome to another update video about ADA. On the ADA chart, we can still observe this potential 5-wave structure that's in development. We're still watching for a 5th wave in this diagonal pattern that started in June last year. Yeah, 1, 2, 3, and we're still watching for a wave 4 and 5. So the wave 4, I mean, it might be complete, but there's not enough evidence yet. We had a bit of a surge, but it's not convincing yet. And then the 5th wave, we're still watching for that primarily to occur at some point. Maybe we're already on track for wave 5, but then that takes more price action to confirm. And we are going to talk about the relevant parameters for both short-term bullish and short-term bearish scenarios in this video. Wave 5 should still take us to 85 and 96 cents, roughly. Depends a little bit on how the subwave structures develop and if we really have seen a low now in wave 4, but it's not quite clear yet. So let's take a look at the microstructure now that the base case is clear. Also for anybody who's new on the channel, basically that means we still have a bullish outlook, but be aware that diagonal patterns are not really offering very clear probabilities and are typically best to be approached with a sense of caution. Okay, so that's what I typically mention when we're dealing with diagonal patterns, especially wave 4 corrections can be very deceptive and they can trick you into believing the correction is over and it might still carry on. That's just typically what we need to be aware of in a wave 4. So such a surprise spike shouldn't really be a surprise. So I never call it a surprise because you need to be aware of this stuff. And we haven't even taken out a previous swing high. But, you know, we talked about this descending wedge pattern, which is basically a breakout pattern, a bullish breakout pattern. And we were just watching for the possibility here of a breakout. And then typically, if a breakout occurs of such a pattern, then oftentimes the first target or the main target is the beginning of the wedge. Mentioned that before, that's around 66 cents. So we're going to take a look at that in this video. But first, let's explore if this is already enough confirmation that really this entire correction in the wave 4 is over. The wave 4 started likely here on the 9th of December. Now, at least we have some new stuff to talk about because in the last few weeks it was really boring. To be honest, we only see a green candle. That's not really enough to really call for this to be complete. Nothing's changed really. Nothing's changed. Why is nothing changed? Because we still haven't seen 5 waves up. Okay, so in yesterday's video we explored that, all right, that move down that we had here, while it was only in 3 waves, it was too deep to be part of a still unfolding 5-wave move. This could have turned into a 1, I don't know, 2, 3, 4, 5, but that was way too low. So there's no chance that this move here is a 5-wave move. So again, we are still stuck with a 3-wave move. ADA avoids forming 5-wave patterns, which means from an Elliott wave point of view, I haven't got the confirmation to say that the low is in. That means Elliott wave tells us we still need to be on the side of caution. So we have no clear parameters here. That's the problem. Not for confirming that a low is in. Well, ADA or the chart gives us those parameters and they are now in yellow on the chart. So that's what the bullish structure should adhere to watch for a 5-wave move. We need to see the 3rd wave reach ideally 61.2 cents, minimally 59.6. Below that, I wouldn't call it a 3rd wave. Then we should get a wave 4, which would be a corrective pullback, and a wave 5 should reach minimally 64 cents, better 66. And here we get to that 66 cent level, which is basically that previous high. So here, for the bullish scenario, if the market can follow through the Fibonacci levels as well as the structural resistance and the target of the descending wedge pattern, they align. So that's pretty good. But then that's not enough. That's not predictive as such. So I'm not telling you in a correction this or that will happen because we know that, first of all, diagonals offer poor probabilities. And then if this is still a wave 4 correction, and as long as we're dealing with corrective structures, we still have to be on the side of caution. So it could easily also be that the wave 4 is still unfolding, which is why I'm showing you that yellow structure as a roadmap, not as a prediction. It just gives you some markers, some levels to watch. Basically what it means, if we can see those 5 waves filled in, that would allow us to offer or to add the next support zone to the chart, which would be a bullish support zone. And this would be the first confirmation that a low is in. Yeah, anything else would be highly speculative. So if I told you now, oh yeah, the low is in, it can easily break down. It can so easily break down still. So, you know, this could still be an ABC structure. Absolutely. Only the 4-5 pattern will tell us that most likely the low formed. Now you might say, okay, but you know, we have to wait for confirmation to make a trade. No, of course not. The support zone, which should generate a reversal, has been defined for more than a month. It's this zone, right? Told you, okay, I would like to even sort of blend out this area down here. So it's usually between 39 cents and 50.8 cents, between the 50% fib level and the 23.6 fib level, somewhere here. People have time to add positions if they want to, or look for short-term entries. That's up to you how you trade this. But essentially, this is the area where pullback traders would get in. Breakout traders might have bought the breakout. Okay, that was clearly on the chart, well defined where a breakout point is. Or but I mean that was the breakout point. Okay, I don't see another breakout point at the moment, other than maybe this B wave high, but I don't see it as very relevant. So essentially, then for me, the next trade setup that could emerge here would be after 5 waves up, the 3 wave down pullback. But then again, I have to say, why trading ADA at the moment? There's no reason to trade ADA at the moment. We have because we're dealing with a very messy structure here. Much clearer charts, Rune, Solana, Matic, maybe even Link, Bitcoin. They are clear charts at the moment. Also on the microstructure, they offer clear trade setups from an Elliott wave perspective. ADA doesn't really. So why make it? I mean, trading is difficult enough. Why make it more difficult than it actually is by focusing on unless you really just sort of, in a very relaxed way, scaling into support. The support area was clearly defined, giving it a bit of space, and then just taking profit as it goes, right? That's the best approach to trade a diagonal. Because the reason I'm saying this, I've had a lot of comments on YouTube, people who demand an update for ADA. I'm wondering, well, nothing changed really. The support area is not broken. The upside targets are clear. But from a structural point of view, microstructure doesn't really hold too much value in these diagonals or in corrections. So I'm just saying, maybe you're trading it the wrong way, or you're looking for a position where the chart just doesn't offer it. There are charts which are very clear on the micro level at the moment. Now that can change, but at the moment they are clear, especially Matic, Bitcoin, Link as well, cooperating well. There are other charts as well, but I just want to make sure that everybody's aware that it might not always be worth focusing on your favorite coin, but rather be focused on the coin that offers most clarity at any given time. And ADA is, diagonals. I often teach this. Diagonals are often more suited for very relaxed scaling in, scaling out, not trading it aggressively and so on, just that as a little bit of a background there. But yeah, overall, we've got some very clear parameters to watch now, but it's too early to say if the wave 4 really bottomed. If you're trading the breakout of the wedge, I mean, fair enough, you have some parameters to watch as well. Okay, so it's it would be the yellow count to follow, but be aware that the first major Fibonacci resistance will be at 57 cents, because this could simply be an A, B, C structure, and these often fail at the 100% extension. That's my update about ADA. So I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.